Broadcasting live from the IRSMedic studios, it's Parental Advisory. We are live on Parental Advisory, and today we're talking, it's that time of the year, Anthony.
It's that time of the year.
Tax time.
It's tax time. It's the exciting time of the year.
And we want to talk about 2015 IRS Tax Brackets. And the first thing we want to say is they don't mean what you think they mean.
They never do, because there's hidden tax brackets. They're not showing. They're leading you down this road that's just not right. It's not telling you what you might need to know.
Exactly. As if the IRS is not confusing enough. Let's make something that should be relatively simple also confusing.
Indeed.
And now, so what do you mean by that? That they're not what you think they mean?
Well, people want to know, well, what's my IRS tax bracket? Well, people are thinking about, well, when they're thinking that, they're implying, I want to know what my federal income tax is, right? Yeah. But that's not everything you pay to the IRS. You pay a lot of other things, a lot of other wonderful things. You pay Social Security. That's a tax, and that goes on your tax return, and you're paying it, okay? It counts. It's still there.
They took the money.
They took the money, right. It's on your federal income tax return. There's also your Medicare, which is on there. And then, we have these lovely Obamacare surcharges of 3.8% that and 0.09% that may or may not come into play.
Yep.
So that's there. And then if you're extra special, you get an entirely different type of tax bracket. And that is, there's two different AMT, alternative minimum tax brackets of 26 or 28%. And then...
But wait.
There's more in the package. Now, if we talk about your federal income taxes, you have a federal income tax rate on ordinary income, but a different rate if it is a different type of income, if it's long-term capital gain, something held over a year, or it's a dividend. But not a dividend if it's from a schedule, not a dividend if it's from a S Corp, because that's ordinary income, but it doesn't get taxed at Medicare and your self-employment for most of it.
Are these all plugins for TurboTax? Or is this a little above and beyond?
I just hope we're highlighting the absurdity of this entire premise,
yes,
of the ridiculousness of it. This is not how it's done around the world, people. This is unique. This is not necessary. I think the quote is, taxes are the price we pay for a civilized society. No. Taxes are the reason why society isn't civilized. This is utter nonsense. And we do have, and by the way, the big fight we had years ago was that they wanted to impose that top rate. The top rate was at 35%, and then some people felt that wasn't enough. So we needed that 39.6%. So that's been around, since 2012? Really? God, time flies. So that's been around that 39.6. But as we mentioned in our podcast, our last episode, these tax rates don't even mean anything in a way, because what are you allowed to expense to get to that number can mean so much more.
Exactly.
And with the PATH Act, a lot of this just goes out the window. You could say, well, I can expense this so I can reduce my income this year. So I don't care what it is. I'm going to go with the lowest rate. It doesn't matter. I'm not going to pay this anyway. So when you're trying to, and this is sort of the thing people want to, I owe 150, or I make $150,000. What tax bracket am I in? Okay, well, that's an easy thing to answer, but it doesn't tell you anything. Because we do have the brackets up where there's a link. You'll see the link to the tax brackets, and that's really easy to answer. But it doesn't tell you what your taxes are going to do. And it doesn't give you any way to plan for it, because it's not telling you all the information. It's not telling you, oh, by the way, if you're self-employed, there's a 15.3% self-employment tax that's there. And how do you know about that? It doesn't tell you anywhere on here.
No.
And you're like, well, I only set aside, this is, and if you're self-employed, you're setting aside far too little.
You have to pay quarterly.
Yes. Yeah, so that's sort of why my big rant, why tax brackets are sort of just, they're really an invention of these progressive lunatics. Just go back to 1913, think about all the progressive ideas like eugenics. In phrenology, you measure someone's brain to that lets you know they're an imbecile or a moron. I think imbecile is better than a moron. I'm not sure. There is a chart. I think actually I do have that chart on IRSMedic.com.
Oh, okay.
There is a chart to let you know if a moron is better. But those are sort of the idiotic things. This is the time of that the progressive ideas that rich people we need to take their money for our grand noble causes. I mean, they talk about an antiquated idea because at the time, the richest people in the world would say, yeah, we should have that income tax. Really? Really? So these guys are working against their own self-interest. Are they? Or are they trying to keep competition down? It's like, yeah, if we have this income tax, then I don't have to worry about competition because I have the attorneys to work around this. My attorneys wrote the code. So it's just so absurd and it's so antiquated. And are we not, I mean, at what level do we just say, this is enough? This is just so stupid. This is just enough. And, part of the problem, I guess, is maybe the English language. The English language is so powerful. You could describe things that are nuts. You can have a net investment income tax imposed on the lesser of net investment income for the tax year or the excess of modified adjusted gross income for the tax year over $200,000 or $250,000 for joint filers or surviving spouses and $125,000 for married taxpayers filing separately.
Oh, now I completely get it. Thank you.
Yeah.
I understand now.
The problem is our language.
Yes.
It's too good. It can describe horrible things that make you say, why are we doing this? Why do we need to do this? Net investment income tax. Yeah, so we haven't even discussed state taxes.
Oh, gosh.
Right. So, I mean, we have a federal top tax rate of 39.6%.
Yep.
California is, I think, 13.35, their top rate.
That's a hit.
Right. And here's the hint. If you're really rich, you're not paying that.
No, you're not. You have a lawyer who's really good at figuring out.
If you're paying the top rates, you're not rich. Yeah, that's probably true.
Yep. So we have a couple sort of odd things. We've got the timber tax.
Yep.
There's actually a website dedicated to it, timbertax.org, to help explain the detailed 28%.
I think it's 23.8% for timber
tax.
For timber gains, which is somewhat odd because it seems like it's a 20% long-term capital rate plus a 3.8. So I don't know why that's there.
Yeah. We have an oddity we found in the single filers tax brackets as well. Thank you, Chris Chen, with your very good eye on this. So tax brackets for single filers. So let's say there's one that's about $91,000 to $189,000. Pretty big difference there.
Yep.
Next, you've got $189,301 to $411,500.
Whoa,
Right?
Yeah, that's big.
The next tax bracket is $411,501 to $413,200. I'm trying to think. Is there a business? Is there a lobby somewhere that wants to make exactly that?
Yeah, right. Well, we really want to screw these people.
Yeah.
What is it? Yeah.
So just some oddities, and what we want to talk about as well in the 2015 tax brackets is same-sex couples.
Yep.
There's a lot of new information in here.
Right, and this is one of, and this applies actually to all marriages. It's one of these crazy things. You can be taxed more because you're married than if you were not married and filing separately. Kind of obnoxious that the tax code is encouraging people not to be married or become divorced. I mean, that's pretty screwed up, and I think that is immoral. And this is the thing. The IRS has no database of who's married and who's not.
No kidding.
No, they have no way of knowing. No.
Oh.
Right, they would have to go down to what they're going to go
to the county courthouse.
Well, which one?
Where they know.
I was married. I was married in Westbrook.
I was married in Las Vegas.
So how do you find? Where's this database? Where do you find this national database of who's married to who?
Duh.
Right. And I'm like, this is one of the biggest honor systems, right? Because I mean, that's talk about bad karma.
Right.
Right. No, not married. Yeah, you just so they have you, right? They have you. They like, I can't really lie that say I'm not married.
They could use Ashley Madison as their database.
Yeah, so it's just one of those things that they have no way of checking. I guess if someone's dishonest, they can get the advantage because they have no way. There's no way to create a national database of who's married to who.
Right.
And so they would have to audit you. But how they audit you to say, hey, who's this person? Just my roommate.
Just Joe Blow. Yeah.
Right? Unless you happen to get married in that exact town and your auditor thought like, wait a second, I might be able to get about $3,000 extra here if I can go find that they're married. So it's just something that always just rubbed me the wrong way.
That's really
There's just
funny.
something wrong about that. So, yeah, I guess you could. I mean, right. And gay couples won the right to be just treated just as crappily
The
as
rest of
like,
us.
great.
Sorry,
way to
guys.
go, guys. I'm like, way to go.
You had a good thing going there.
You just could have just zipped your lip.
We'll make sure we include that same-sex spouse information on the Lincoln website as well in our article, just so everyone has the most up-to-date information. But, you know, I think for the average taxpayer, it can be really confusing. So it's one of those times, you know, one of my friends recently posted on Facebook, should I do my taxes myself or hire someone? And I really think it's worth.
I don't believe you.
No, I swear to God.
I don't believe that you have a friend.
Oh, shut up.
Old joke.
You know, just working here in my own experience, there's so many loopholes. The tax code is so friggin' confusing, even for an average person, as we're finding out here, that it's worth reaching out for help.
And a lot of the questions people have aren't necessarily all that stupid, because when you know more about the tax code, you find out how stupid it is.
Yeah.
And you say, really, there's no stupid question, because there are things that are incredibly stupid in the way that they treat certain things. There's really no logic process to it.
Right.
Now, a common question people have is that, this is one people feel stupid about, is, well, so if I make more money, does that mean that my taxes could drive down my net income because I make $1 more? Is that how tax brackets work? People think like, and honestly, no, that's not how it works. But in my experience, that's not a dumb question.
No.
That's not. No, this is the IRS we're dealing with. This is the federal government we're dealing with. It's not a stupid question. They will penalize you. I mean, they can penalize you $1 million on an account that doesn't make money. Okay, so you're going to tell me is that a stupid question? Well, can I end up losing money by making more money? It's not a stupid question, but the answer is no. The way the tax brackets work is for the bracket from here to here, the ordinary income tax rate is this. For the additional dollar here, this is the tax rate. For additional dollars in this bracket, this is the tax rate. So you should never be in a situation, even though there are, where an extra $1 will reduce your income. And where we're seeing it, and I have to verify again, but it's where the net investment income tax comes into place, because it can trigger, I'm pretty sure it can trigger a tax on the whole, or it's the Medicare one. But that's where we're seeing it. It's the people who are around $250,000, they actually can. I am 98% sure.
We will verify.
I will verify that. But that was something where I'm like, okay, wow, this is the time where that extra $1 actually will give you a lower net, because of the other hidden taxes that you're not thinking about with the IRS isn't publishing.
Right. And to further confuse matters, I mean, we just had the PATH Act pass, and the PATH Act made changes to the current tax code, retroactive for 2015.
Right.
So you think you know what's going on. And I mean, unless you're subscribed to these press releases, which are a little onerous and boring to sort through.
In the Federal Register, right?
You may not know that these changes are happening. So it's worth asking for help, and there is no stupid question.
Not with the IRS.
Nope. All right. Well, if you like this video, make sure you like it and leave comments or questions below for us. We will get back to you. You can subscribe to our channel
and
for
hey,
more
look,
awesome videos.
All of Claudine's friends on Facebook can like it too. We can definitely get
a like.
We'll get a like.
Come on, Joe. Don't let me down. Well, thanks so much for watching. Thanks for joining Parental Advisory, hosted by Anthony Parent, produced by Claudine Gindel, that's me, engineered by Chris Chen. For more podcasts, visit our website at parentaladvisoryshow.com and like us on Facebook to submit story ideas. We'd like to thank our sponsors, IRSMedic.com, the law offices of Parent, and Wynn, LLP, real tax attorneys for tough tax problems.